Hello and welcome to episode 512 of the Money to the Masses podcast with your resident expert as always, Damien Fay, and me, Andy Leeds. Now, Damien, this is a super exciting show. Welcome back, by the way. How are you doing?
Yeah, it's good to be back, Andy. And as you say, it's a very exciting show. So over the last year, we've been working mostly in top secret on an AI guidance engine. And by that, I mean a tool that can answer any of your money questions instantly. So you just write in any question you've got, whatever language or however you want to ask that question, and it'll give you something back instantly. And that AI guidance engine is called Damoney. So Damoney. And I might as well just explain where that came from. A lot of people who heard the name originally, because we did give a sneak peek to our AI guidance engine at a trade show just before Christmas, and people are like, oh, it's show me the money. And I suppose it could be that as well, which is why the name kind of works, but it's actually a shortened version of my name, which is Damo. People often call me that, and then the word money combined together. So when you see it shortly on screen, then you will notice why the word is spelt the way it is. So I'm really pumped to be announcing this. So let's take a step back. If you go back to 2010, when I started Money to the Masses, it was a period where blogging was new, and essentially I took technology and used that to bring guidance to the masses, hence the name Money to the Masses. And if you jump forward to now, what we're doing is using a new technology to do that in greater scale, to really fulfill what we always try to do with Money to the Masses. And if I was honest, if I was to launch Money to the Masses today from scratch, pretend the podcast and website never existed, then it would look very different, and it actually would look like Damoney. One of the problems with financial education has always been that the problems that people have only become apparent to them at the point that the problem occurs. So let's pretend you've gone on holiday and someone asks you whether you want to pay in a local currency or sterling. You might not know the answer, and really no amount of financial education is going to solve that problem for everybody. So Damoney and AI guidance is a way that you can help people at the point at which the problem occurs. So what we've done is build this AI guidance engine, and it looks at all of the content that we produce over the last 15 years. So that includes website, the podcast, the YouTube stuff that we do, and it pulls all of that fact-checked expertise and guidance together, and it uses that via a large language model to analyze the question that you ask, and then looks at the fact-checked information that we have, and then produces an answer that is concise and accurate. And it'll also provide ideas of what you should also ask the AI engine for more information on, or links to articles to start your journey on learning about that particular problem that you've got and resolving it. So I'm absolutely pumped about it because it is amazing. I wouldn't be putting it out there if I didn't think it was the best thing that is out there in the UK at the moment. And as a separate piece that's going to be coming in the next couple of months, once the app is launched, then you will be able to, as a business, have this plumbed into the back end so people can help their customers. Because one of the biggest problems we've got in the world of finance is everybody is scared of AI when it comes to customer facing AI. So there are companies out there in finance who are using AI internally to try and make things more efficient, but they're not presenting it to customers to help them, to give them the best outcomes, which are in line with FCA guidelines. So what we are doing is we want to be at the forefront of that, and we are at the forefront of that movement to try and produce something that is not only going to be compliant, but it is going to help customers. So I'm going to explain more of how it works. I'm going to show people so they can see it in practice. Now on screen, if you're watching this particular podcast, then you will see that on the homepage at Money to the Masses, there is a big box that says ask any money question. This is how you can access the Money to the Masses AI. So Damoney, which is in the background, is the guidance engine that answers all of these questions. The manifestation on the website is the Money to the Masses AI. And you can also find this via a link at the top of the page. If you go to the Money to the Masses AI link, or you go to the web address moneytothemasses.com/AI, you can access it there. Or if you are on any article on the Money to the Masses website, you will also see there's a small pop-up in the bottom corner that wiggles when you hover over it. If you click on that, then you can start talking to our AI and ask it any question about anything to do with money. So what are some of the reasons why using Damoney is better than using some of the other large language models out there? Well, it's purpose built for finance. And so it's built upon specialized financial knowledge. It's articles that are fact checked. Answers that are given are reviewed by experts. So people like me and the team. Other large language models do not have somebody like me who has qualifications in things like mortgages, CMAP, in investing, which was the IMC, in financial planning, like the Certificate of Financial Planning or the Diploma in Financial Planning, or qualifications in compliance that looks at the answers that come out so they can continually improve and teach the model to make it better. And also we have those guardrails that we can put in place to ensure that the answers are accurate, and it limits the ability for hallucinations to occur. So when you ask a question, you'll get general financial guidance. It's not regulated advice, obviously, as nothing is on Money to the Masses or its podcast. And it empowers you to make informed decisions. And also, when you go through the answers, as you will see, it knows when to suggest professional help, and it'll put links in there to services that you will find useful. So what I'm going to do now is show people our AI guidance engine in action, because that's the best way to see what it can do. So as I said, you can access it on the Money to the Masses website, but if you click through on there is a link. You can go through to Damoney and actually do it on that website. So we are going to have an app for this particular name and brand called Damoney. You can see it on screen. I want everybody listening to go and have a play with this, ask questions of it. And so I can look at the answers in the background anonymously and see what they're like. And you hopefully will be impressed with what we've built. And the other thing I want everybody to do is, once they've played with it, so it should be thousands and thousands and thousands of you doing it, go and tell as many people as you can about this, because this is the future of Money to the Masses. So if you want Money to the Masses to continue to grow, you love the podcast, you love the website, you really need to support what we're doing here with Damoney. So the questions I'm going to ask Damoney are real questions that have been asked of the AI guidance engine by real people. So it's been available for about 10 days, and people have gone on there and asked a whole load of questions. So I've picked some of the most interesting questions and the most popular questions. Hopefully it means there will be something in these questions that you probably didn't know before and will learn for the first time today. So the first question I'm going to ask is, what are the market predictions for interest rates? So as you can see, Damoney has answered that the Bank of England is expected to cut the base rate 2 more times in 2025. Currently, the base rate stands at 4.25%, and it's predicted to fall to approximately 3.71% by 2026. That's January 2026. Following this, it's anticipated to rise gradually to around 3.85% by January 2030. And it lists the specific predictions. It then goes on to say the Bank of England has previously raised the base rate multiple times to combat inflation, which has recently risen to 3.4% above the target of 2%. The Bank of England has indicated it will not hesitate to rise rates again if inflation accelerates further. But a key thing is giving you an article to go to for more detail, also some related articles for best mortgage rates, best fixed rate mortgages, and how to get more than 5% interest on your savings, but also some further questions to consider. So how will these interest rate changes affect my mortgage? What are the best savings rates available right now? And then there is the risk warning that's at the end of every question at the bottom about seeking professional financial guidance. If I click on the link that it gave me, you'll jump across to an article on the Money to the Masses website where you can find out more, which is a whole article on where interest rates will go in the future and the market's predictions. So you can read that at your own leisure and learn more. That's a key part of Damoney. We didn't want something that was going to just try and give an answer in a tiny box that would be inaccurate. It enables people to learn more about a topic. So the next question I'm going to ask is, a guy at work reckons he can get £1,000 tax rebate from claiming some kind of tax allowance because he's married. Is that possible, and can I claim it? So Damoney answers, yes, it is possible to claim a tax rebate through the marriage tax allowance if you are married or in a civil partnership. This allowance allows one spouse to transfer a portion of their personal tax allowance to the other spouse, which can result in a tax deduction for the high earner. Eligibility criteria: to qualify for the marriage tax allowance, you must meet the following conditions. You must be married or in a civil partnership. You were born after the 6th of April 1935, One of you must be a non-taxpayer earning less than £12,570 a year. The other must be a basic rate taxpayer earning between £12,570 and £50,270. The potential tax rebate for the 2025-26 tax year, the maximum amount that can be transferred is £1,260, which can lead to a tax saving of £252 for the higher earner. Over the past 5 years, you could potentially claim up to £1,260 in total if you meet the eligibility criteria for those years. Here's how you claim. You can claim, and it goes on to give you the page where you can actually claim for the marriage allowance and the details you need. And it talks about the backdating of the claim as well for the 4 previous tax years, which explains why your person or your friend at work was able to get more than £1,000. There are some important considerations, like the non-taxpayer must be the one who applies for the allowance, and you can go through and read a full article on the marriage tax allowance as well. And there are some other suggested questions and things to think about, which is always an important part of what Damoney does. It suggests things you might not have thought about. And if I click on that article, you can see on screen here's a full article explaining how the marriage tax allowance works. So I'm going to ask Damoney, how much child benefit will I get if I earn £65,000 a year? The reason I ask this question is because of the high income child benefit charge, which starts to reduce the amount of child benefit you can claim if you earn over £60,000. So Damoney answers, if you earn £65,000, you will be subject to the high income child benefit charge. Here's how it works. It then lists the child benefit amount, which I'm not going to go through, and then it explains how the high income child benefit charge works. It's if your adjusted net income exceeds £60,000, you will start to lose your child benefit. For every £200 of income over £60,000, you lose 1% of your child benefit entitlement. At an income of £65,000, you are £5,000 over the threshold, which means you will lose 25% of your child benefit. It then goes on to calculate what that means and how much child benefit you will get. It then links through to the official child benefit calculator provided by the government and suggests you go over there and get an official calculation. So I'm going to ask a question close to my own heart. I have Crohn's disease. Can I get life insurance? I'm aged 46. And how much would it cost if I can? So Damoney has gone and looked through all of our fact check content and has answered that question, that yes, you can typically get life insurance if you have Crohn's disease, but the process may take longer than a standard application. You will likely need to answer additional questions regarding your condition, such as when you were diagnosed, the severity of your symptoms, and any medications or surgeries you have undergone. As somebody who has actually applied for life insurance, I can tell you that that is obviously true. Premium increases. If your Crohn's disease is well controlled or in remission, you can expect a premium increase of approximately 50% to 75%. For example, if your original quote is around £20 a month, you might end up paying £30 to £35 after medical assessment. It's then gone on to look at a typical premium for a 46-year-old male, so a basic premium for somebody who's healthy is just under £15. Then with the 50% loading, it takes it up to just over £22. The 75% loading and 100% loading you can see there as well. That means that if you were to apply for life insurance, your premiums could range from approximately £22.45 to £29.94, depending on the severity of your condition and the insurance provider's assessment. It then goes on about important considerations about medical underwriting, doctors' reports that may be needed, and the importance of seeking independent specialist advice when it comes to taking out life insurance if you've got a pre-existing medical condition like Crohn's disease. It then links through to a couple of articles on the Money to Masses website which will be of interest, including one specifically about life insurance if you have Crohn's disease. You can see on screen the article from the Money to Masses website, Can I Get Life Insurance If I Have Crohn's Disease? And all the information and more is contained in this article. And at the bottom of the answer by Damoney, there is a link through to a service that gives specialist advice on life insurance if you want to use it. One of the most popular questions being asked of Damoney is, how much money do I need to retire at age 60? As the question is fairly generic, so the answer will be 2. So Damoney says to determine how much you need to retire at age 60, you can use the free pension calculator available on Money to the Masses website. The tool is designed to help you calculate how much pension you will need to retire comfortably and can also project the impact of retiring early. It then goes on to explain the input details you need to put into the calculator. It's got a link where you can go through and use the calculator. And it also gives you some considerations, including the presets and how you can adjust them. And if your projected retirement income is less than what you need, you could try increasing your contributions, delaying your retirement, or reducing the amount of tax-free cash you wish to take. And then also gives you additional resources to read and other things to think about, as well as links to where you can get professional advice if you don't have a financial advisor already. I'm going to ask Damoney a property-related question, which is, I live in London and have 10k saved up and I really want to buy, as my rent is almost 2k a month. Is there any way I can get on the property ladder and stay in London? So Damoney gives you an answer that will help you explore some of your options. It says getting on the property ladder in London with £10,000 saved can be challenging, especially given the high property prices. However, there are some options you might consider. Shared ownership being the first one. It says the scheme allows you to buy a share of property between 25% and 75% and pay rent on the remaining share. This can make it more affordable to get on the property ladder. You can find more information about how it works, and it links through to a whole article and guide on the Money to the Masses website about shared ownership and how it works. It then talks about 95% loan to value mortgages potentially. So that could mean you use your £10,000 as a 5% deposit. This could be a viable option if you can find a property within your budget, and then gives you a link through to the best 95% loan to value mortgages. It then highlights a scheme that's no longer available, which would help to buy equity loan, but then suggests the lifetime ISA to have a look at, which allows you to get £1,000 a year, a government bonus if you put £4,000 a year. You can see the full answer on screen. It then tells you to consider other locations other than central London, perhaps boroughs further out. It then says about keeping an eye on government schemes and the importance of getting financial advice. But then, importantly, it links through to an article on the Money to Masses website, which is the first-time buyer guide that we have, which is everything you need to know. It then lists some other related questions to think about, which includes how you can improve your credit score, what are the ongoing costs of ownership beyond the mortgage. So you could ask those of Damoney. But just to show you something else, if you thought, well, what about 100% mortgages? It then goes on to explain no deposit mortgages and gives you some resources to go and look at, and actually some lenders that are offering these types of products. As you can see, reviews of those products as well. So I'm going to ask Damoney one of the most popular questions it's been asked since launch, which is, what is the best stocks and shares ISA? And as you can see, Damoney gives a very comprehensive answer. So it goes through a summary as of July 2025 when I've asked the question, some managed stocks and shares ISAs to look at. So one from Interactive Investor, Wealthify, Money Farm. It looks at who they might be good for, any offers, the portfolios, the minimum investments, the fees, the annual costs of investing, the self-invested stocks and shares ISAs, so Interactive Investor, AJ Bell, Free Trader, some of the suggestions. And if you're an ethical investor, then some of the stocks and shares ISA options are out there. Again, Interactive Investor, Wealthify, Nutmeg are listed, but there's a full article you can click through to where you get a full analysis of all the different stocks and shares ISAs out there, which you can see on screen here, where it draws a lot of the information from, and you can see there's videos, etc., that you can find out even more about stocks and shares ISAs and which might be best for you. Damoney also talks about additional considerations, including investment risk, and obviously warns you about ISA limits, and then suggests about seeking professional advice for your own situation. This was an interesting question asked about pet insurance of Damoney. So my two cats are now 13, and I'm not sure whether to continue to get pet insurance for them as it's getting more expensive each year. Now, while this is a pretty general question, Damoney gives a strong answer, which is deciding whether to continue pet insurance for a 13-year-old cat can be challenging, especially as premiums tend to increase with age. So here are some considerations to help you make an informed decision. So cost versus coverage. As pets age, they may require more vet care, which can lead to higher costs. Evaluate the premiums you are currently paying against the potential costs of vet treatments your cat may need. Then look at the types of insurance. There are actually different types of pet insurance, including lifetime insurance, which covers ongoing conditions for the life of your pet. Time limited insurance, which covers conditions for a set period. Maximum benefit insurance, which provides a maximum payout for each condition. And accident only insurance, which covers only accidents, not illnesses. Lots of people don't actually know there's different types of pet insurance, and you can compare these options to see which might be more beneficial for your situation. And more details you can find in an article which explains all of the different types of pet insurance on the Money to Masses website. which you can see here on screen, explains all the different pet insurance providers for each type of pet insurance and compares them. Other things that Damoney suggests is the health status of your cat. If your cat has pre-existing conditions, it may be worth keeping the insurance, as new policies may not cover these conditions if you take them out. Also, thinking about a financial buffer, consider whether you have the financial means to cover unexpected vet costs without insurance. An emergency fund can help mitigate the risk of high vet bills. Then Damoney suggests you look at a range of pet insurance reviews on the Money to the Masses website. And Damoney concludes with saying that the decision should be based on your cat's health needs, your financial situation, and the specific terms of the insurance policies available to you. So this is a question asked of Damoney regarding buy now, pay later services and using them if you want to try and get a mortgage. So Damoney states that using buy now, pay later services can potentially affect your chances of getting a mortgage. There are some key points to consider. Impact on your credit report. So buy now, pay later transactions are being included in credit reports, which means lenders can see your usage of these services. While using buy now, pay later may not directly affect your credit score, initially it does show up as credit commitment. This can influence a lender's decision when assessing your mortgage application. Debt to income ratio. When lenders evaluate your debt to income ratio, then they include all your financial commitments. And if you have multiple buy now, pay later agreements, this could increase your perceived debt levels, making you appear riskier to lend to. And responsible usage. If you use buy now, pay later responsibly and make payments on time, it may not negatively impact your mortgage application. However, if you miss payments or if you accumulate significant debt through buy now, pay later, it could harm your credit worthiness. And there is obviously the risk that buy now, pay later services encourage impulse buying. It can encourage overspending, leading to financial difficulties. And if you find yourself in debt due to impulsive purchases, this could further complicate your mortgage application. So it gives in a summary of the answer. While buy now, pay later can provide short-term financial flexibility, it's essential to manage it carefully to avoid potential negative impacts on your mortgage application. And then gives you some full resources on using buy now, pay later. And there's some related articles on how to buy a home if you're a first-time buyer, questions to ask a mortgage broker, and then obviously what to look for when buying a house and getting the best deal. Other things to consider: how to improve your credit score before applying for a mortgage. You could ask this of Damoney. It will give you an answer. What are the current mortgage rates available, and what documents do I need to apply for a mortgage? So this was another question asked of Damoney about savings. I have 10k to put in a savings account. I want the best rate I can get, but it has to be easy access. What are the best options? So Damoney answers the question. It understands what easy access accounts are. We update our savings accounts at Money to the Masses regularly, multiple times a week, in fact. So therefore, the information that you get is going to be up to date and accurate. It then gives the best easy access savings accounts. It lists them, tells you the minimum balances and how you can manage them. Chase Bank is listed with 5% interest, then Atom Bank at 4.75. It links through so you can find out more information. And it's got Snoop Easy Access Savings Account, Kahoot, and it goes all the way down. And then it talks about other considerations. So the FSCS protection you should think about. And it also gives you the link to an article of the best easy access savings accounts on the Money to the Masses website, which I've clicked through to here, and you can see this is where it's pulled the information from, and we update these multiple times a week. So no matter when you ask that question, the information you get will be up to date, and that's something you can't rely upon from other large language models out there. So there you go, Andy, a whole host of questions put to Damoney already, and you can see the quality of the answers. And if you're listening to this, watching it, do make sure that you go and ask questions of Damoney. You can go via the link to Damoney, which is damoney.ai, or you can go via the Money to Masses website, moneytomasses.com/AI. Ask whatever questions you want. You'll also be helping us, don't forget, because by asking questions, we can look at what the model does, and if it needs a bit of training, then we can train it. We can see what people are asking, and even if there are gaps in content that we need, then we can fill those as well. So please, we are helping you. This is almost a culmination of my life's work in producing this tool. So we need and want this to be the thing that everybody in the UK uses. So go out there and talk to people about it. If you've listened to this show and you've not immediately gone off and said, I've just seen something amazing, go and use this, then please do ask yourself the question, why haven't you done that? Support the show, go and tell people about it. Next time you're in the pub, barbecue, mention Money to the Masses Damoney. And also don't forget, in a few weeks' time, you'll have an app that you can download, which you can then show to people. You've really just been given the first look at what we've done, and I want everybody to please do use it.
Yeah, and so it's super simple to find that with any smartphone app. Literally go to your browser, type in damoney.ai, so that's DAMONEY.ai, and it will open up and it will work just like any other website, but it will be fed by the Money to the Masses expertise. And I know this has almost been an advertorial for the Money to the Masses Damoney app, and we don't actually care about that because we believe it is that good. And the app itself, the dedicated app, will be out in just a couple of weeks. Make sure you download it and tell all your friends. So Damien, we are done for this week. We have covered everything that Damoney does and how people can use AI with our dedicated expertise in order to do anything financially. I mean, we talked about insurance, we talked about savings, we talked about mortgages, we talked about pensions. It does its thing. And like you said, Damien, the beauty is we get to see everything that's put into that app, and we use that to make it even better. So it's like this feedback loop that goes on, and we're personally so proud of it.
Anybody who's listening to this who might work in the world of finance, who has probably been tasked at some point, or somebody has in their organization, we've got to make something for customers that is AI based so we can help them 24/7. Well, get in touch, because this is something we're going to be doing in the coming months, where we allow people to tap into this and use it for their customers. So that's it for this week on the podcast. Andy, as ever, do follow us on all our social channels. In fact, there's a whole host of Damoney social channels. If you do search for them on Instagram, TikTok, etc., you will find a channel of Damoney that we're going to start putting content on. So you might as well go and follow that as well, so you can see what we're going to be putting out via the Damoney brand. Don't forget to sign up to the Money to the Message newsletter, out every Sunday at 10 a.m. with all the stories that matter and impact your finances. So that's moneytothemessage.com/weekly-newsletter, and of course join our Facebook group as well. So before I say all that's left for us to do is say goodbye. An important point: there will be no podcast next week because I won't be around. I'm having a little bit of a mini break, so 1 week off. So play with Damoney for 2 weeks solid, and we'll be back in 2 weeks time with the next show of the Money to the Masses podcast. So Andy, now all that's left for us to do is to say until next time.
Until next time.